Welcome to the Explainer. Today, we're going to pull back the curtain on the rules that companies have to follow when they report their finances. And trust me, this isn't just about boring spreadsheets. It's about trust, it's about where you put your money, and really, it's about how India speaks the language of global business. All right, let's kick things off with a simple question. So picture this. You've got two companies. They sell the exact same thing, right? Both seem to be doing great. But when you look at their financial reports, they're completely different. How in the world are you supposed to know which one is actually the better bet? That's the core problem that accounting standards were created to fix. So let's rewind a bit. Imagine a world with no rules for this stuff. It's financial chaos. Every company is basically writing its own financial story in a completely different language. You can see how that would be a huge problem, right? Hard to understand and almost impossible to compare. And here's what that looks like in practice. On one side, you've got Company A, and their report is just a mess, a jumble of numbers and vague descriptions. Then you look at Company B, and they're using a totally different format. You're trying to compare them, but it's literally like comparing apples and, oranges. It just leads to confusion, zero transparency, and a whole lot of mistrust. So, to sort out all this chaos, India took a really important step. It decided to create a common financial language for the whole country. This meant introducing the very first formal set of rules to bring some order and consistency to the game. And what was that solution? Well, they're called accounting standards, or just AS for short. Now, don't let the name scare you. Think of AS as the official rulebook for financial reporting. It's basically a set of detailed instructions that tells every company, hey, this is exactly how you need to record and report your money stuff. Now, these standards aren't just one big rule. They're built on four main ideas, four pillars. First, recognition. That's all about when you record a sale or an expense. Then there's measurement. That answers how much is it actually worth. Third, presentation. That dictates how you show it all in your reports. And finally, disclosure. This makes sure you share any extra details that people need to know for the full picture. Put them all together, and you get financial stories that are actually clear and consistent. So what was the big deal? What did these new rules actually accomplish? Well, they brought three huge benefits to the table. First, standardization. Suddenly, everyone was playing by the same rules. No more making things up. Second, disclosure. Companies now had to share more information, giving everyone a much clearer view. And maybe the most important part, comparability. For the first time, you could actually put two companies side by side and make a smart, informed decision. But just when things were getting sorted out at home, a new challenge popped up. As the Indian economy started growing and our companies went global, we realized something. Our national financial language, well, it was different from the international one. We were all speaking the same dialect in India, but the rest of the world was speaking something else entirely. As Indian companies started to look abroad, they ran into a new hurdle. If you want to raise money from investors in New York or London, you have to speak their language. They need to be able to look at your numbers and compare you to a company from Germany or Brazil. A single global standard wasn't just a nice to have. It was becoming absolutely necessary to build that international trust and attract investment. And that global standard is what we call IFRS, International Financial Reporting Standards. Now, here's the key thing to understand about IFRS. It's principles-based. What does that mean? Well, think of it less like a super detailed instruction manual and more like a constitution. It sets out the big fundamental principles, but gives companies the flexibility to apply them to their own unique situations. And that's exactly why it works for so many different countries and industries around the world. Now, this is where India's story gets really interesting. How did we decide to join this global conversation? Instead of just throwing out our old rulebook and starting fresh with the global one, India chose a much more thoughtful, strategic path. So any country has basically two options here. You can go for adoption, which you see on the left. That's pretty much a direct copy and paste job. You take IFRS exactly as it is, but India chose the path on the right, convergence. This is a smarter approach. It means we align our standards with the global ones, but, and this is the important part, we make specific, deliberate tweaks so they work perfectly for India's own laws and economic reality. And that brilliant strategy led to the creation of Ind AS, or Indian Accounting Standards. You can think of these as being built on the IFRS chassis, so they're totally understandable to a global investor. But they've been customized just for India. It's like we're speaking the global language of finance, but with a distinct Indian accent. So what are those specific modifications I mentioned? They have a name: carve-outs. These are the key differences that were intentionally designed to handle situations that are unique to the Indian business world. These carve-outs are precisely why we call Ind AS a converged standard and not just a carbon copy of IFRS. Okay, so India now has this new globally aligned rulebook. Awesome. But the next massive question was, how do you actually get everyone to use it? Let's take a look at how Ind AS was rolled out across corporate India. The whole switchover was done in a really smart, phased approach. It happened in two main ways. The first wave hit on April 1st, 2016. That's when the real heavyweights of the Indian economy, we're talking companies with a net worth over 500 crore rupees, had to make the change. Then, exactly a year later, it was everyone else's turn, all the other listed companies and the bigger unlisted ones. This step-by-step plan made sure the whole transition went smoothly. Yeah, that 500 crore rupee number, that was the magic number. That was the line in the sand. If your company was that big, you are now officially speaking the global language of finance. This one rule pretty much transformed India's financial landscape overnight by bringing all the corporate giants into the new system. And make no mistake, this was a permanent change. The move to Ind AS is a one-way street. Once a company makes that switch, there is absolutely no going back to the old standards. This was India planting its flag, cementing its commitment to being aligned with the global financial world for good. So this whole journey from total financial chaos to a globally converged standard, it's a really powerful story, isn't it? It shows just how important it is to have a common language, and it has a real impact on everything from your investments to India's place on the world stage. But it does make you wonder, in a world that's always changing, is this the final chapter? Is one universal financial language the end of the story, or is a brand new one already being written?